Welcome. My name is Van Richards. I'm a chartered financial consultant, and today we are talking about Tesla. So let's get right into the daily stock analysis. Tesla is an amazing story when we look at the company. Few years back, it was kind of floundering, and you'll see a little bit of that today when we talk about the history of Tesla. I talked about Tesla just a few weeks ago, and that was before the earnings call and the earnings report. But after that, things have changed enough that I think that it warrants that you get a little bit more information. Also, I had one of the listeners that requested that I give some more information on Tesla. And I'm happy to be able to do that. I'm glad to be able to help you. If you have stocks that you're interested in, as long as it's not some fringe stock that there's not a lot of information on, I'll be glad to look into it and perhaps integrate it into the show that I do on a daily basis. There's 3,500 stocks on the NASDAQ, and there's quite a few on the New York Stock Exchange and all over the place. So primarily, I want to work with those that are on the NASDAQ or on the New York Stock Exchange. Over the counters get a little bit crazy, but I'll take a look at those too. The other thing I want to mention to you is, before we get into Tesla, that if you live in Texas, my specialty is helping people to plan for retirement and to plan so that they don't run out of money during retirement. So if you want more information on that, go on over to my website at richardsfinancialplanning.com. Let's get right into talking about Tesla. I usually do a little bit of video that goes along to introduce Tesla or whatever company that I'm talking about. And I think I've added a few things in here that'll just kind of be a little surprise to you. So let's watch this together. Now, it's interesting when I do companies like this and the market gyrates so much, because when I put the company's value, like right now, Tesla is valued at $385.8 billion. That was a little bit earlier in the day, so that can change. And it's intriguing to see how many billions of dollars that a company's value can change in just a matter of hours. And when you look at Tesla, a lot of people also think that Tesla, they're primarily just an electric car company. And they are. That's their primary business. But they also have other different things that they do. You might think that they're more involved in the space industry than they are. And they make space rocket components. They don't make space rockets. SpaceX is actually, majority of it is owned by Elon Musk. It is not part of Tesla. So you have to separate the two from that point of view. SpaceX is actually a private company, and I don't really see that that's going to become a public company very soon. So let's look a little bit further at what's been happening, what the really, really good news is with Tesla as we go forward. What's warranted a change from the last time that I talked to you about this stock is really the cash position. They're extremely profitable. If we look at the third quarter, you see the little rotating green circle. Let me make that just a little bit bigger for you so you can actually see what's going on. They have about $1.4 billion in free cash flow. That's awesome. That's up $1 billion year over year from last year. And it does include some emission credits, but that's something that's going to go along with the way that the vehicles are made. They beat the consensus of earnings quite a bit. The earnings per share was 76 cents. They beat the consensus of 57 cents. And if you think back a whole year, last year in the third quarter of 2019, they were only at 37 cents. So let's look and see what's going to be going on going forward, because I think that's really what we want to do. How profitable is this company going to be going forward? They're estimating, well, I'll say the street is estimating, the analysts are estimating that vehicle delivery for 2021 will be around 950 million vehicles. That's actually up from about 800,000 vehicles for 2022. Now, hang on to this. Their estimate, or not their estimate, the street's estimate is 1.6 million new vehicles in 2022. That's up from what the estimate was at about 1.5 million vehicles. Now, where have they come from? I want you to look at where they've come from, because I'm talking about a lot of positive things with Tesla. But look, there's going to be some bumps in the road, just like today. Today was a down day in the market for most stocks, but not for Tesla. Tesla actually hung in there. It was down just a fraction, not very much. It started a year ago at $65.54, and it ended today at $420.28. Now let's go on back. Yeah, okay, great. It had 541%. That's not going to happen again. That's like getting struck by lightning about 1,000 times in a day. Now, if we go back, this is the part I want you to pay attention to. When you look at the spaghetti graph, look right here. This is, if we go all the way back, let me get the right numbers in here. All right. If we go all the way back to 2017, you see that the price of that stock was $65. The price of that stock a year ago was around $65 too. So for quite a few years, it hung out around that $65 share price. They've only really accelerated in the last year. And I think that they're going to continue to do that based on what the consensus is with the increase in vehicle production and the increase in the fact that they're going forward. But if we take a look at the actual earnings history, this is the graph. They've hit their mark pretty much, but you have to understand that they have not been that profitable in some particular quarters. Elon Musk at one point even said that, everything wasn't about profit. I don't know if I believe what he was saying in there, but let's look at how they're competing with other companies too, because I know GM the past week, they came out and they introduced the electric Hummer. Now that'll be an interesting thing to see how that competes, but I don't know if it's going to be able to compete with Tesla's truck. We'll have to see what the price is going to be. If you look at the graph, the Tesla's year dwarfs everything else, and they have dwarfed it in value. At $392 billion, they are the largest car maker on the planet Earth. The closest ones are going to be GM and Daimler, and together, they still don't meet the valuation that's on Tesla right now. Now, I want to talk to you just for a second about growth and value. I know that there's a lot of people out there that are saying that there's a rotation in going from growth stocks to value stocks. I think a lot of that is nonsense, because all of a sudden you're not going to see a company like GM that's, just because it's a value stock, that's going to be jumping ahead. So don't go with the inclination that you, the investor, the listener, that you should go out and you should just buy all value stocks and dump your growth stocks. It just doesn't work like that. That's kind of a philosophy, but I think that philosophy is flawed. Look at these as what their profitability is, folks. There's three things. Remember what the three things are that we look for in a quality stock. Number one is we look at earnings, we look at competitiveness, and we look at the stability. So let's keep going on at this. Remember, the past performance is not a guarantee of the future results, but we want to look at the moat. Remember, the moat is going to be that imaginary barrier that stands between the company and their competition. Morningstar is the one that came up with this concept. And let's say a month ago, Morningstar was basically saying that Tesla had no moat. Now they have a moat, and they're looking at from the standpoint of intangible assets as being one of the biggest attributes of this company. They also have a huge cost advantage because they've got a head start of about 10 years on every other electric car maker. So even though you might be thinking that the Hummer electric vehicle is going to be competing and Volkswagen's going to be competing and Ford's going to be competing, that's great. But the problem with those companies is they're about 10 years behind Tesla. Tesla's already geared up and running. And that's why I think it's going to be good going forward. When we look and see at what the analysts have said, Tesla has caught people's imagination. Think of when Star Trek came out. Star Trek caught everybody's imagination. And Tesla has caught that fire just like the movies has. The vehicle operation cost is actually doing much better. Now, look, the vehicles yes, they are more expensive than your standard vehicle right now. But when we look at actually the cost of running a gasoline engine or a diesel engine versus an electric engine, the electric engine is less expensive. It's not just in emissions, it just costs less to operate. So that's one of the benefits of it. Now, in the very beginning, you saw me talk about the supercharger network, and that's the network of charging vehicles throughout the country. Not everything is rosy about Tesla. Now, we have to touch upon that because if you're investing in stocks, you must understand that you're going to hit some bumps the road. There's a lot of uncertainty. And if you go back and look over the past 4 or 5 years when we went through that period of time where Tesla was hanging out at around that $65 range, there's a lot of uncertainty that goes in there. And geez, we can't overlook Elon Musk. Yes, he's a great leader of that company, but he's a little bit eccentric. I threw in the video of the flamethrower, not just as a joke. It's because he promoted it. He was it was part of their production. Obviously, it was just part of what he was doing. He's also made some comments that have not been taken very nicely by the securities regulators. So he's learned a little bit better from that. Plus, some of this is going to take a little bit of time, and the competition is not ignoring it. Even though I've downplayed competition and said that they're behind by about 10 years, some of them might catch up faster than others. When we look at what Morningstar has said, Morningstar is pegging the value, and this is where we get to the good part. So hang on just for a little bit. We're going to look at what the analysts are saying. Morningstar is actually pegging the value on this stock at $319 a share. That's up quite a bit from what it was. That's not right, that discount. The 2 stars it used to be a 1-star company. It's gone up to a 2-star. Also, ignore that number that was the discount because it's not. It's actually a premium right now. Okay, what are the other analysts saying about Tesla? If we look at the average analyst, there's about 19 of them that are covering Tesla. 8 of them right now are saying that it's a strong buy. 8 of them are saying it's a hold. 3 of them are saying it's a sell. Now, don't look at this and think that it says get out right now, because let's look at actually what the analysts are saying. This is the report that shows what some of them are saying. If you follow my cursor here, you see that Barclays was saying that it was a sell. But look what the target price is. They're putting a target price for sell at $125. It's around $420 right now. They're not going out and selling this stock. They're holding it. If you look at some of the more optimistic pricing, you're looking at Oppenheimer. Oppenheimer is giving a range of 451 to 486 as the target price for this stock. They may sell at that point in time, but they're looking for it to go from where they are right now, around 420. Even though that we're in a market that could be falling. And let me tell you, folks, I don't think that today's downfall in the market is over. The elections are going to have a big effect on it. We don't know what's going to happen, so we might be in for a little rough ride. But do this if you would. Take this as an opportunity to buy some stocks that you like. I recommend that you have, if you're going to invest, don't buy just one stock. Look at investing in maybe 25 different stocks. And if you're investing in 25 different stocks, that doesn't mean that you have to buy full shares. Look at a brokerage house that allows you to buy partial shares. A lot of them do right now. I use a company called Folio, but I know that Fidelity does and Schwab does, and a lot of other companies do too. The partial shares will allow you to take like 10,000, 100,000, million, whatever you got, and divide it among the shares that you like. If you have 25 companies that you like, you should expect probably 10 of them at any particular time to not be performing exactly the way that you like. But when the market falls like it is now, be ready to buy, be brave enough to buy, and you will get bargains and you will make money off of them. Now, can I guarantee that? Of course I can. It's a stock market. But the point is going to be that if you set aside money for stocks that you like, let's say, for example, Tesla, it didn't go down today very much, but let's say, for example, if it does go down and you like this stock, be ready to buy more of it. If it still continues to go up, buy it as you go along and don't put it in all at one time. That would be the best thing that you could do. Dollar cost averaging is not always the greatest thing because you might not get the best price, but it's the safest way to invest. Well, a safe way. Using the word safest implies that it's the Absolute. I can't do that. Okay. Anyhow, folks, I want to thank you very much for listening today and watching. I hope if you're listening live that you'll give comments. If you're listening on a replay, type them in. If you have a stock that you like, put it in and let me know about it. If it's not a friend stock, then I'll be glad to take a time and put it into the program. But with that said, I hope that everyone has a great evening, and I will talk to you tomorrow.